Hello, today we have Bruce Ogilvie, the executive chairman of Alliance Entertainment, trading on the NASDAQ under the ticker AENT. Bruce, welcome back.
Thanks. Thanks. Good to be with you again.
For those new to Alliance Entertainment, Bruce, could you provide an overview of the company and how it has grown into the category leader for physical media distribution all over the world?
Yes. So in 1991, my partner Jeff Walker started a music store, and then I joined the company in 2001. And that time we were doing about $18 million a year in revenue, from music store to wholesaling music to other independent music stores around the country. Fast forward to 2010, and we acquired a company that in the movies. And then 2018 went into video games, and then collectibles came in 2022, or earlier than that, and that led us to an acquisition we'll talk about later on called Handmade by Robots. There, so fast forward 2001, 18 million, all the way up to 1.4 billion in a 20-year time span.
Despite the rise of digital streaming, Alliance continues to thrive in physical media. Can you share your insights into the ongoing demand for physical formats, Bruce? And how are you capitalizing on the trend?
Yes, there's definitely headwinds in physical with all the digital opportunities for the consumers, which is very efficient. And at the same time, it really helps promote those categories when it's an all you can eat type of buffet of music or movies or video games. You can explore things without taking much financial risk. And then once you find something you really love and that you want to own, or you have a connection with the artist, then you make that next step where you want to physically own the product instead of renting your media. You can own your media like we all used to back in the 80s and 90s there. We have to, as a company, we have to take advantage of that and consumer needs and wants there, and deal with it as these big, huge multinational companies, and they have all this intellectual property of movies, music, and video games. As digital becomes more of a greater concentration of their business, we want to come in and step in and say, listen, we want to take over your physical distribution and license that content. And that'll allow us to be the last company standing to take advantage of that evolution and change. We don't believe physical media will ever go away. There's lots of many reasons there, as I talked about, consumers want to own versus rent. Versus they might have bandwidth issues. They're really big in collectibles. They think socially this is really better for the artist or the creator of the content. All those reasons will keep us around for a very long time there, and us to become the leaders of those categories.
Turning now to a recent acquisition you made, Handmade by Robots. This expanded your presence in the massive collectibles market. Elaborate on this one, Bruce. What is its strategic significance? How does it enhance your growth trajectory?
Yes, Handmade by Robots is a company that they had a form factor. A form factor, just think of it as a plastic mold or a model of a way to license IP from movies, music, video game companies there, or Netflix for particular TV series there. And it's very similar to what you see with Funko. Funko is a very successful company, does over $1 billion in revenue there. BDA, which is the company that owned Handmade by Robots, they just didn't have the expertise that we have in distributing to this mass retail, of reaching out to every online retailer and every marketplace in the world there. And that's where we step in there. And we saw this as a great opportunity. Okay, now we always want to take, when our business is good and our profits are strong, how do we diversify and leverage into something else to make us branch out and be better? And it's going to start off very small. We're hoping to do about $10 million this year, and within 2 years we can get it up to $100 million worth of revenue. But the sky's the limit for us. We have a fantastic form factor. If you get a chance, check it out. It's very well received in the marketplace. It's in the collectible space. You can't download collectibles. It can't go digitally. You have to physically buy the piece. We're looking at the success of Funko, what they did right or what they did wrong, and we're hoping to follow behind them with our form factor and just license content that'll work through our ecosystem of movies, music, video games, or TV series.
There we are again with that idea of being able to hold something in your hand. Very interesting.
Yeah, tangible product, physical media, physical consumer goods. That's a way for us to diversify, take advantage of what we have, and bring in higher margin items that are become way more profitable for us.
You know, Alliance is so cutting edge in so many ways, Bruce. For example, you've made significant investments in automation and efficiency technologies like AutoStore and Sure Sort X. How are these initiatives impacting your operations?
If you look a year over year, you'll see that our fulfillment cost was running over 5%. And then now you can see that it's trending now below 4% there. And that's basically an investment in the automation that you mentioned there. That just makes us more efficient. And in one of our operations there with AutoStore, and that's our vinyl area there, we have 41 processors or pickers that were walking around the warehouse picking the orders. And now we've been able to reduce that from 41 down to 7, in which we really eliminated is the travel time. Instead of the picker walking, the processor walking to the shelf comes to them. Within every 10 seconds, they can fulfill a line item on an order, and that just makes us way more efficiency. Same type of efficiencies we get with receiving, no more traveling to find an empty shelf. The empty shelf comes to the processor, they store the product, and it's available for sale. We can certainly add more and make more investment and do more automation in our thing. It's just a matter of CapEx dollars and finding the right time to implement those dollars. But so far, we're very happy with it because AutoStore is extremely scalable as well as OPX.
All right, Bruce, to wrap up, talk now directly to our viewers. Tell them, what is the essential value proposition behind Alliance and why should they take an interest right now?
Well, starting in 2001, we're doing $18 million and we do all our acquisition. We grew by doing acquisitions. That's how we got to the size that we were. But it was all basically borrowing money and doing ABL type financing there. No private equity investment at all. And so 20 years to get to $1.4 billion. And now being a public company, we're in our second year anniversary is coming up February 10th that we become public. We've definitely got all the rookie mistakes as a public company behind us there. We're poised. We have 3-year financing in place. We're on an acquisition hunt right now. So hopefully we can double the size of the company in 5 years, what took us 20 years to do. That's the value proposition here.
And it is a good one, Bruce. Thanks for telling us your story.
You're very much welcome. Thank you for taking the time today.